Well, I think we are live. I think, right? I don't know. Again, let me try to see if everything is okay. If you guys can hear me, the audio is good. Um, the quality of the still checking, right? Just give me some minutes, guys, and we will start. Um, Almost. Give me just some minutes. But I need to check the quality of the audio and of the video too, to know if you guys can see me, and of course, if you guys can hear me too. The quality of the image and the video is very important. Hmm. And of course, I have to post on my Telegram channels too, live, right? So everybody will know. I think for what I can see here, we have 7 people right now in the chat. So yeah, today I didn't trade, didn't took any trade, didn't even watch it to the chart. So as you guys can see right now, my trading view is on the main page, right? I didn't took any trade today. I didn't even know what happened on the chart, on the market today. So it will be very interesting to show to you guys the process that normally I use to choose one trade, because I don't know what happened in the market today. So it will be very interesting to show to you guys, look, okay, we have daily cycle of the price here, we have one entry here, we have one continuation trade, we have one river trade here. A lot of things happening like it's live for me, because I didn't saw it happening, right? Um, just let me just the last post I will do. I will post now on my Instagram that I'm live, right? I'm on live stream already started. Oh, I think it's not necessary actually. Let's just start. If they saw it, it's okay. So it will be very interesting for me to show to you guys at least how I catch my trades, how I spot them. So because it will be very interesting to show to you guys all the process that I use to take one trade. That can be a stop loss or a take profit, of course, right? Well, I'm in the main page of the trading view. Just click it to see the S&P 500 just for curiosity. Let's go to the chart. And in this live stream too, I will talk with you guys about the psychology of the trade. I think it's something very underrated, right? I think everybody knows it's underrated actually, because we focus too much on the technical part and forget about the mindset, right? The psychological part of the trade. And it's very important. The psychological part of the trade can make you uh, take one opportunity or lose one opportunity, don't make money because you will feel fear, right? So from the live stream that we did yesterday, I remember that we never talked, we didn't talk about two trades that I took yesterday, right? Yeah, I didn't. I took two. Actually, was three. One of them was a stop loss. I told you guys, and two of them on of course on US 30 was a stop loss. So sorry, I think I said something wrong. Two of them was running, it was running well. I ended up closing them yesterday, but one was a stop loss. So I took two trades. Two, it wasn't a take profit because I actually closed them one manually, and one was a stop loss, right? So we talk about those two trades. It was something in those areas right here. We will talk about them, and we will talk about the opportunities that we had in the market today too. But I don't know which pair we'll be talking about. I don't know if it will be Euro USD. Well, we had huge drop in Euro USD. I think I'm still short in Euro USD, right? Yeah, I'm still short in Euro USD. I have these huge short positions that's still running. I closed it over 90% already. I think I started the position with 25 or even 40 lots, and now probably how much is running right now? Look, if you guys compare what I showed, wait, my screen is very dirty right now with too much finger impression. But again, okay. Right now, the Euro USD trade still running, but with just one lot, and the Nasdaq trade still running too, but with 7 lots. And gold not that's not gold. That's actually it's XTI. It's US oil trade still running too with 1.50 lots. And I took partial today. I actually posted those partial on Instagram. On Euro USD, I closed 4 lots, and on US oil too, I closed 6 lots. So that's why. But the Euro USD trade was a huge trade. I was with like 25 lots, and now I just left 1.01 running. Yeah. So I have this huge trade running Euro USD, but we won't focus on it. I will actually delete it because it's not important anymore. All those analysis that happened here or this move here, it's not important too anymore. I can actually delete them, and we will focus on what happened today, because we talked on the past live stream about what happened yesterday. So yeah, and with my eyes on the chat too. So if you guys want to send any question, ask anything, we can do a Q&A too during the live stream. I will explain, and if I see any interesting question, I can for sure answer it, right? Same thing that we did yesterday. So let's start, right? Yesterday I took two trades here, exactly right here on US 30. One of them was a beautiful beautiful trade, or an amazing trade actually. It was something like this. It was a very very tiny stop loss, and I took the trade. The price just stuck um, on the my buy sell limit. Sorry. And by the way, I'm a little bit tired, guys, so that's why but I'm tired. Um, price just stuck on my entry and then dropped very hard. I think I still have the screenshot of this trade exactly here, but I closed them already. Let me see if I have the screenshot here. I should find a way to share content with you guys directly, right? Because it's so tough. I don't know if you guys will be able to see, but I will try my best. Look this. Can you guys see it? Look where my order was. It's US 30. Look where my order was. Right? The price just stopped on the entry and then dropped very hard. And as I told you guys, it was two orders, right? You guys can see the third one was the first one that I tried to took, actually was the stop loss. So you guys can see, but it's a screenshot. It's not the trade actually, because it's closed already. I closed the trade yesterday, right? So this fish trade right here, it is very interesting to understand, and it was very risky too, by the way, because that's not the normal type of trade that I took. But when I'm confident about my analysis, I will risk it. I'm in one position that I can do this now, right? But let's say 3 years ago I can't. I need to be very sure about what I'm doing. Today I can speculate a little bit more out of my comfort zone because I have money to to capitalize on it. And if I took 1, 2, 3, 5, 10 stop loss, I don't be in trouble. It's not a big deal for me anymore. Yeah, but this first trade was very easy to understand. It's very easy to understand actually, because in this case, I was looking at this high right here when the New York session of the previous day opened. It opened it and dropped very quickly, and I showed you guys that yesterday on the past live stream, the live stream we did yesterday, that this is the clear daily cycle of the price. If you didn't saw the live stream we did yesterday, let me put this a little bit more. Yeah, I think this is better, so you guys can will be able to see the chart better, right? So this zone right here after ISS range, and then we had London and New York. When New York dropped it so hard, it took the liquidity at the bottom of New York, sorry, of London, yeah, and where is the dollar sign? Yeah, it's here. It took the liquidity at the bottom of Asia session and at the bottom of what? Of London too. But I was waiting too at some level that we will sweep the top of New York session, right? Of course, to complete the cycle, the price swept the top of Asia, right? London, New York swept the previous low and the previous low of London and the low of Asia, and then it started to go up. So I was waiting that at some level we will sweep the top of New York and even the top of London too. As I told you guys yesterday, like why I closed this trade, it was running, right? Something like this. I closed it at some level here, in 1 to 12, 1 to 10, I don't remember anymore. But why I closed this trade? Because this high too was a potential point that price could came to sweep the liquidity at this high. That's why I closed it, because I was with the fear that price respecting this demand level, it will probably go up, go in a bullish intent to come here or respect this supply zone, or even take the liquidity at the top, right? So that's why, yeah. So I was waiting for some entry confirmation here. I had one beautiful point of interest free. It was a how can I call this in English? That's very interesting thing. How can I call this this concept in English? Because when we have, let me try to draw it so it will be more easy to understand. When we have this type of uh, shift on market structure, right? So price break structure, go to the upside, and it start to retrace, respect demand, but then it failed. So what actually happened is that we had a demand level here that price at first respect, right? So we saw bullish intent, bullish buyers, right? Buyers coming to the market. And then when actually, when supply took control of the market, actually what was left was two main points of interest. One here, the first one, and the second here. So that's exactly what happened for me to choose this point of interest here, of course, in 1 minute time frame. I don't know actually if it was something like this or even like this now, but I won't waste my time showing you guys how I refine it at this right now, right? This live stream is not about how to do refinement. Let me drink some water again. So when we swept the previous New York high, I have it. I will test the hearing, right? When we swept, what happened? Glad I have this automatic corrector. So when we swept the previous New York high, I started to look for a entry confirmation to short. And let's see what I saw here, right? Let's go to the 1 minute time frame. It's a very interesting setup and entry trigger. That's the most interesting actually. Setup is a common thing when you are using daily cycle to trade. But the setup itself, after I choose the point of interest, I had some imbalance at some level here, and I put my order here and the entry here, right? So it's a limit. But the second entry, right now I need to check actually on my okay, it was on 1 hour time frame to show to you guys the second entry because I didn't have the markups on my um the second entry was at some level here. So we put something like this and try to guess what I was looking when I took this second trade. Yeah. So if the second entry was here, probably I was looking to something like this, yeah, probably at this when price came back to fill this fair value gap, I ended up catching this second trade after what? After a choke here. Sorry, choke. We had a choke, price came back to fill it. Then we break structure at some level, and when price came back at some level here to fill this fair value gap, I ended up catching this second trade at some level here. I don't remember right now, but that's the that's what makes sense for me right now. I think something like this or even like this probably is what I was looking for. And I ended up catching this second trade. I don't know if my microphone is if it would let me check something guys. Just a minute to add some gain here and maybe you guys can hear me better. I think now you guys can hear me better, right? Let's continue. So right now what we will do, as I told you guys in the beginning of this live stream, I didn't took any trade today. I didn't even watch the market today. So let's go to one random part, not random actually. Let's see Nasdaq, US oil, and gold, and see what trade opportunities, which trade opportunities the market gave to us today. I didn't trade today at all. I don't know even what happened in the chart actually. And let's start with gold. Gold, Nasdaq, and US oil. Let's start with gold and see what happened today on gold. Right. So 15-minute time frame. Normally, when I'm going to the market, if I want to see 15-minute time frame have something very interesting to show to me any type of liquidity creation in sweep, I will go to 15-minute time frame and see what's happening. Right? So clearly here, trying to read structure of 15-minute time frame, we have after we made this bottom, we ended up making the new high here. So you could expect, of course, a retracement at some level. But that doesn't mean that you'll be able to capitalize on this retracement, right? We talked about this on the past live stream too. But clearly here, price left a bunch, right, of internal range liquidity. All the liquidity inside this range need to be, price need to catch it to sponsor the next bullish move, right? So after that, let me delete all the analysis. We talked about this already in the past live stream. If you didn't, I won't. So yeah, this way I think is better. 20. Okay, so you guys can see it, right or not? Now, okay, this way you guys can see it. So it was clear for me. It is clear for me that after we made this bottom, this line right here, we left a lot of internal range liquidity inside the range, right? So at some level, we need to expect that at some point on the market, price will retrace to catch this liquidity and sponsor the next bullish move. Because the structure is bullish here, right? Because that's exactly here is when we break structure. 20 minutes. Sorry, we are in 50-minute time frame, right? So after stabilize, after know where my trading range began and when and where it stopped, So we have the bottom here, the high here. I need to know where is the liquidity inside this range. So for me, in 15-minute time frame, it's clear to understand the power of this fair value gap. It will act like a, sorry, I don't know this word in English. Let me go to my Google Translator and find it very quick. Act like a magnet and attract the price to this area, right? So that's what that's exactly um, what will happen here. Because after the price catch all the external range liquidity when it broke this high exactly here, right? Catch all the external range liquidity, it will came back to take the internal range liquidity to sponsor the next move and align that with the daily cycle of the price strategy. It's very interesting and very powerful actually, because you can understand too that after price break structure here, okay, high, low, high, low, low, high. I don't remember now. Sorry guys. Just continue. So all the liquidity inside this range need to be captured. So price will have strength enough to push to do the next bullish intent, right? So clearly here, I can just mark exactly right now my internal my imbalance and try to do what? Try to refine it the most I can to the 1 minute time frame. Let's try to refine this imbalance to the 1 minute time frame. Okay, we can mark this as our imbalance in 1 minute time frame, as you guys can see, right? Hope so. This is the first imbalance the price left before it start to go bullish very, very hard. But at the same time, I can identify clearly here that we have a liquidity build. Clearly here, look, this is too beautiful to be a normal market, right? On the stream we did yesterday, I saw to you guys that this was a clear entry trigger, right? Entry trigger confirmation for a buy position. You guys didn't saw what's happening. If you guys didn't saw the last live stream, you guys can go and watch it. But this is clear a liquidity build too. So I can say that here we have a liquidity and inducement theorem on. But here we have two another block or demand level, whatever you want to call it. You can put them two on. Okay. And let's go to the 15-minute time frame. So now we have two zones that we can watch, right, for a buy position. But remember, if you, right, if you mark your zones, okay, I have one range, I will wait for the price to come back to my range, to my zones to start to trade. You will probably not trade at all in 1 week. You will wait like, in 1 week, you will have like 5, 10 setups like this, and over half of them will fail, 100%. I'm very sure about it, because this is the traditional way supply and demand or other block traders trade. That's the traditional one, and it, you can be profitable. I believe that you can still be profitable using this, but I think without the psychology, the emotion control you want, 100% you want, and that's the main problem, because 100 over 99%, 99.9, let's say in this way, don't have the emotion control to trade it this way. Because when they start to get, when they enter in one stop loss, like in loss, consecutive losses, like 10 loss. By the way, if you are trading one prop firm, you probably won't hold your account too much using this strategy at all, because in 1-2 weeks you will blow your account here. The parameters, the limit to be on the account, like 5% monthly drawdown, let's say, you will lose the account. just on your personal account, you can hold your account trading this way, right? But continuing, if you trade in this way, the traditional way, you probably won't be profitable. Simple cause things change, things change. A lot of people are trading this way, it start to become liquidity. But when you ally this kind of view with the daily cycle of the price, and of course, I explained this to you guys yesterday, but I will explain today again, because we have right now 13 people here on the chat, so I think it's worth to explain to you guys right now. Yesterday I told you guys that the market move on waves. Everybody know this already, right? And impulse and retracement, right? So impulse, retracement, impulse, retracement. What happened is that over 90% of the traders, they want to trade following the trend always, and that's fine. That's nothing wrong about it. But you miss a lot of opportunity to go against the trend too. You can go in favor of the trend 100%. It's nothing wrong with this, nothing, right? But when you go against using the right knowledge, the right strategy, you can capitalize a lot and have a lot of do a lot of money actually. As I told you guys, if you still wait for this, right? I mark my 50-minute time frame zone, refine it to 1 minute time frame, and let's say this is the point where I'm waiting the price to tap, and then I will start to search for entries. If the price stop here and start to go bullish, you will be out of the trade. And I'm damn sure this already happened to you a lot of times, because it happened to me too when I start, like in 2015, um, when I start to learn about smart money and supply and demand, order block. I try everything. The path, the way you are now right now, I did it too. But let me continue. After the break of structure, after the impulse, you have the retracement, and you can capitalize on the retracement. What 90% of the traders are doing, they are trying to capitalize in this impulse, and they forget the retracement. They say, okay, I don't care about retracement, and they are waiting to the next push to the upside. But they forget too that they will have all these problems, that sometimes price won't touch on their zones, or even price will change the control, or even do a trap. That happens a lot too. That's one thing that I saw happening too much with me when I was a beginner. Like, price will do what? Price will break structure to the upside, shift the structure to the downside, and go to the upside again. I'm damn sure that this happened to you a lot of times already. And I already did one free video here on my YouTube channel. It's on my YouTube channel, explaining how can you avoid this kind of situation and make money and profit from it. I did this video already. I think the name of the video is how to capitalize on 15-minute time frame range. I don't remember right now, but it's here. 100% it's here, right? So basically, I did this draw to explain to you guys that you can capitalize on the bullish and on the bearish, right? On the impulse and on the retracement, right? So let's go there, and I will show to you guys that clearly we had opportunities to capitalize on the retracement. Because if I start to wait for the next bullish, the next impulse, look what happened actually. Price just swept this point of interest. So this is the day 3 of January. I mark all these point of interest in day 3. Day 4, price was creating liquidity and then start to drop. And day 5, I just got the stop loss. So I wait day 3, 4, and 5 to get stopped, right? So let me show you guys how you guys can capitalize on the bearish way. And maybe if I saw any trap, right? Any kind of trap here that we can use to capitalize on the continuation trade, I will show to you guys too how that was possible. First, I can't see any 15-minute time frame chalk here. I can't see, right? And again, for everyone, someone that is new here on the live, that we started yesterday, so everybody's new, sorry. um, it's very possible that you don't know how I, 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 I mark, let's say in this way, my chalk. Chalk for me isn't a shift or market structure. Chalk and shift or market structure for me, different things, right? I'm always talking about this because it's too much repetitive, too much persons, students asking me about this. That's why. So I can see any 50-minute time frame chalk, but what I can see actually is a 50-minute time frame internal break of structure. So let me mark it and let's continue, and I will show to you guys how can I spot a clear reversal entry here. And I can actually show it already. It's very clear for me, but I will show to you guys. So here, what's first, what's one internal break of structure for me? It's not the break of structure inside a range. Internal break of structure for me actually is a entry trigger pattern, right? I can recognize that actually this concept make some will cause some problems because internal break of structure it definitely mean that it's one break of structure internal, right, inside the range, but I name it like, okay, it's one entry trigger for me, and that's the way I name it, and you guys will learn it now. So here, one internal break of structure for me is one is where when sorry you have buyers coming to the market, sellers coming to the market, buyers coming into the market again. They don't have enough buy power to overcome the sellers that joined the market here, and the sellers to control over the market again and push all the buyers that joined it exactly here. Let me explain again. Buyers coming into the market. So we have a bullish candle. It will be normally 4 candles, right? Sellers coming to the market. So sellers will retrace the market, right? Buyers coming to the market again, but they don't have enough strength to overcome the sellers that joined it exactly right here. So what will happen? Sellers will to control of the market again, fight with the buyers that joined it exactly here that made all this move to the upside, and they will win. So we will took out all the buyers that joined it here, and price will do this movement. And this move for me is what I call a internal break of structure. Of course, this probably will be, it will happen like this, right? Something exactly what we have here. But we have some rules, right? I can't explain to you guys all of them because concepts when you're trading concepts they are all connected with each other. So if I start to explain to you guys exactly the rules to understand if it's a internal break of structure or not, we will need to talk about structure. And I don't have time to talk about structure right now. But the good news is that I already did one video here on my YouTube channel for free again, explaining how I read structure. So you guys can go to my YouTube channel and watch it when you guys want, right? So here, what happened is for me one internal break of structure. So this is internal break of structure for me. Let me remember you guys that before in some time too we will start to talk about the psychology part of the trade. I took I prepare some content right for you guys, and I think it's very interesting. So keep watching this live. In some like 20-30 minutes we will start to talk about the psychology part of the trade. So this is the break of structure for me, and this is exactly what happened actually here. As you guys can see, buyers coming to the market, sellers coming to the market, buyers again, but they wasn't able to overcome the sellers that joined here. And then what happened is that buyers that joined exactly here lose the fight with sellers that joined here, right? Again, let me explain again. That's very important. Buyers, sellers, buyers. What happened? They fight. They have a fight with sellers that started this retracement here. They lose. So sellers win, and sellers will do what? They will fight with buyers that joined here, and now they win. That's how I know this is one internal break of structure, right? I'm drink some water. So after the break of structure, what can happen is that normally you will have one entry confirmation here, but this is one entry, not entry confirmation. So the entry confirmation was on 15-minute time frame at least. We can see it already, right? But you will have a trade opportunity here, but this is just on 1 minute time frame. On 1 minute time frame, you have the trade opportunity here, but we are on 50-minute time frame, so we can actually refine to this level. And again, a internal break of structure will always have these two levels. Maybe sometime what actually can happen is that when buyers join it here and start to fight with sellers in this bullish move, they actually already mitigate this the entry, the supply level of course in this case it's supply level, but you guys need just to inverse it to revert it. Oops, my mouse dropped. You guys then need to reverse it to have one bullish scenario, right? So if when price stop on this level, it already mitigated the supply level here. So we don't need to have two zones, we will have just one, right? So let's go to 1 minute time frame now. What happened? Look like my mouse drop and then become very slow now. Let me try to, yeah, now it's better. Wait, okay. And for supply, of course, I use king. So let me change it. And let's go to the 1 minute time frame and start to spot after this internal break of structure. Let's see if we had any entry opportunity here on 1 minute time frame, right? So here, what happened when price came to mitigate this level? We have any entry trigger confirmation? Let's see. So price came here. First of all, I can clearly refine it to this. As you guys can see clearly, we have one. I think you guys can see clearly actually. I need to zoom in more. But now you guys can see. Let me turn off to the Asia range, the session indicator, and you guys can see clearly here we have one imbalance. So if we have one imbalance, right, you guys can see it clearly, right? Let me see in the stream. Yeah, you guys can see it clearly, 100%. So if we have this imbalance, of course, we can refine this point of interest. And when price stopping on this zone, let me see if I can find any entry confirmation. And sorry guys, I can't find any entry trigger confirmation. We had a break of structure here, right? But price never came back to fill this trade value gap or after break of structure, this one right here. And I would place my entry exactly here, 100%. But that would be the reversal trade, right? We was trying to catch the reversal. We can find any continuation trade. Let me see if we had any confirmation trade here. For confirmation trades, I use two patterns. One is a trap, and the second one is when the trap fails, I want to see imbalance up below the trap, or below, of course, if it's a bullish um, trade, and above if it's a bearish trade. In this case, it's a bearish case, so let me see if I can find any continuation trade here. 1 minute, guys. I need to search for it. So I can't see any trap yet. Let me continue. Maybe we had something here, right? But it will be a reversal trade. I don't think I would catch it too, because the fair value gap actually is here and not here, right? This is the second fair value gap. I prefer look to the first one, and price never came to fill the first one, right? Yeah, 100%. It never came to fill it. The first one is at some level here. Let me see if I can find a continuation trade. That's the thing. Right? We had something very almost, but we didn't have the trap. So if we don't have trap, I can't say it's continuation trade. It will be a reversal trade again. Continuation trade. Almost here too. Almost we had one, but it's not a trap. It's just a normal supply level, right? We break start bottom, top, break structure, come back, sellers come into the market, and then we have a huge sell. So we don't have anything, any trap here. It was clear, right? I think so for everybody. Um, Let me see here. Nothing. Here, exactly. Okay. Here we have a continuation trade with a trap. What happened here? Let me show it to you guys. So again, in the way I read structure, right? Make it clear. In the way I read structure, at least, um, we have what? We have a bottom. Wait. We have a top here. We have a bottom here. We top. We made a bottom here. Fuck. It's not a. It's not a. It's not a trap again. Why? I thought that the structure was in this way, like this. So we have a bottom here, top here, a bottom here. Sorry, a bottom here, a top here. So what would happen is, let me draw it so it will be, I can explain it better. It will be something like this, right? So we break structure, we made another structure here, and then we go up to mitigate this level. So that will be our trap exactly here. Because we had this structure that was first, this impulse never got filled enough for price to catch all the internal range liquidity, and this second in this retracement and another impulse, price wouldn't respect it because it needed to came here to catch all the internal range liquidity inside this range to sponsor the next bearish move, right? Something like this, at least on a bearish example. Of course, I told you guys in the beginning before we start to search for traps that I use two models, right? So unfortunately, that's not a trap. That's a normal structure again. Let's say in this way. Of course, we still have liquidity, but it's not a trap. Liquidity is inside the range. Why? Because after we break structure here, we broke here two to the downside. We create liquidity. Price came here and mitigate. I don't know. It doesn't matter actually if you select this one or this one. If you put your stop loss above this high, you will be okay, 100%. Something like this, right? We still on gold. Let me see if we have something. Yeah, we didn't have anything. What happened actually is that we had a perfect buy position here. I don't know if you guys remember, but this is when price got out of the range already. Exactly here we had a perfect buy position. And you guys may are thinking right now, you just that I just took that position from the air, right? Okay, it's a beautiful trade because it started to go bullish very hard. But I will explain to you guys, and it's the same concept that for the impulse and retracement that I told you guys at some minutes ago. And let me explain it to you guys. You just re-explain actually, because I already explained. In the same way that when price move in this way, I try to capitalize on the bullish move and on the bearish move, right? So I try to capitalize on this move to the upside and in this move to the downside. If it's a bearish move, because in this way it's price is going up. If price is going down, I will try to capitalize on what? I know that after price catch the liquidity in this low, it will go up to mitigate something inside the range, right? That's exactly the explanation for this trade. And it's a entry confirmation. Guess the entry confirmation here. The same entry confirmation that we use it to spot and try to search for a sell here is the same one that we would use to get one entry here, but on 1 minute time frame. Of course, this one is on 50 minutes, but this one would be on 1 minute time frame. So explaining again, after the price didn't respect this low and break structure, I can start to search for one buy position, because I know price will certainly do one retracement at some level. I don't know if it will be till here or at some point here, or just fill this fair value 50-minute time frame fair value gap. I don't know, but it will retrace to mitigate something, right? And in this retracement, I can capitalize in one buy position again. Uh, So I explained it to you guys in the beginning of this live stream. How can we spot how is the formation of one internal break of structure, but one bearish break of structure. And here on 1 minute time frame, after we broke, we took the external range liquidity, we have one buy, one bullish internal break of structure. And let me show it to you guys. And that would be my intro trigger, 100%. I don't know if some of my students took this trade, because I wasn't even active on the Discord today. 1 to 10 something, it will still running, right? Because it didn't even, of course, depending on where you took the trade, it was like this, it will be 1 to 10 already. But the entry trigger is more important than the trade itself, right? So look what happened here. We have sellers coming to the market, right? Sellers. Then what happened? We have buyers coming to the market, right? Then sellers came to the market again, right? And what happened? They fight with the buyers. They want to win, but they didn't. They lose. And what happened? Buyers came to the market again, and we broke structure. Sorry, we made one internal break of structure, entry trigger, right? And that would be 100% one entry trigger, valid entry trigger to catch this trade right here. If you think that's something that I'm telling, like I didn't know what I'm telling about, I have a bunch of trading breakdowns here on my channel. And of course, if you go to my YouTube channel again right now, subscribe by the way, and drop your like in this live. That we just have 19 likes. I know someone didn't like it. Drop your like in this live stream right now, right? If you go to my YouTube channel and search for entry patterns I used to trade, you will find me explaining all the entry patterns I used to trade, right? All the entry triggers. So that's gold. I think, I don't know if we had any continuation trade, but I think it's just time to move, because we have over 50 minutes of live stream, and we need to talk about Nasdaq and US oil too. So let's go to Nasdaq and see what happened there today. And this is the trade that I took yesterday and still running till now, right? This one's still running, 100% still running. But I will delete it from here too. I already did a breakdown with you guys on live yesterday about this trade, right? So you guys can just watch the past live stream and see everything. Yeah, this is the trade. Look, still running here. I don't know if you guys can see the entry actually. Because I have one light here, that's why the camera can't focus on the screen of the phone, you know. That's why sometimes I put my hand here, you know, as you guys can see, look. I have one light again. Yeah, you guys can see at some level here that we have some a order. So Now you guys can find it. 100%. So that was the entry I captured today. Yesterday, sorry. Today. I didn't even watch the chart today. I can delete everything here, but I don't think it's necessary anymore. Well, Nasdaq, I can see that the daily cycle of the price played well, very well here today. So Asia session, we swept the bottom, then we swept the top, then we drop hard. Test the book trade, right? Let's see. Let me see. I won't take too much time to show to you guys. I will be more direct in the Nasdaq and US all just to show to you guys the entries, and we can continue to the psychological part of the trade that I want to talk about a little bit about this in today's video, right? In today's live stream video. um, so yeah, let's go. Let me just go to 1 minute time frame and show to you guys if we had any triggers to capitalize on this bullish and bearish movement on Nasdaq today. So after we swept the bottom of Asia session, did we had any entry confirmation? No, we didn't. I can't see any entry confirmation here. I just can't. I don't have chalk. I don't have chalk. I don't have internal boss. I don't have break of structure. I don't have chalk type 2, so I can't see any entry confirmation here after we swept the bottom of Asia session range and took the liquidity that was sitting there. And after we swept the top of Asia session range, can I see any entry confirmation? Let me see. Um, we had this break of structure here, but it will be a stop loss, 100%. It will be a stop loss because if I try to capitalize break of structure, shift of market structure is correct term actually. There is, let me turn off the session indicator. So shift of market structure, I would select this point of interest 100%, and it will be a stop loss. It will get swept. Um, something like this. After that, we had one internal break of structure. Again, right? Buyers, sellers, buyers, sellers again. But as you guys can see, clearly price never come back to some level here to make for me at least attractive to short the price again. It's just start to drop very hard. So I can't see any trade, even when price swept the top or even the bottom of Asia session. Uh, sorry, I saw one trade and it will be a clear stop loss, 100%. And it's totally normal, stop loss happens. Let me see now if after we swept again, what? So we already swept the top and the bottom of Asia session, but when London swept the Asia session low here, it made a low too. So the previous low, the London low, sorry, it's a daily cycle zone too. So after the price swept the London low, did we have any entry confirmation that we could capitalize on it? So when we swept the bottom at some level here, price dropped very hard, so we can't do anything actually. We could do anything. So I can't see any confirmation after price swept this low. Let me actually mark it and deactivate again the okay previous on the low, the indicator for sessions, so I can see it better. I can't see any confirmation. We don't have any break of structure, nothing. Let's just start to drop very hard. Here we had a break of structure, right? Yeah, here we had a break of structure here, but price made a trap. Actually, price just create liquidity inside the range. I can't see any imbalance here, but the only thing I can see actually is a liquidity and inducement theorem zone exactly here. So a lead zone here. I won't mark it. If you are on, I don't want to do that. After this break of structure, of course, we create another break of structure and create a trap, as I told you guys, right? Break of structure again. But why I'm calling this a trap? Because price never came back even to fill this the inside range, to catch the internal range liquidity of the first internal break of structure. So it started to go up, and I already know that at some level it will retrace and catch retrace, break a lot of structure, but it will respect the first one because it's when where it want to go to catch all the liquidity, grab all the liquidity, all your stop loss, and then go bullish again. Let me see what happened actually. Yeah, unfortunately, price didn't tap on the liquidity and inducement theorems on it. It respected something here, probably on seconds, and I won't go there to refine it now. But you guys can see clearly what happened, right? Then it could explode. Then we had this retracement, and when we swept here, I saw actually a entry when I was looking for the chart, because after we swept here, we definitely create a choke here. We had a choke. As I told you guys, choke for me is something different. And after this choke, we had the opportunity to capitalize on this fair value gap here with our stop loss above, sorry, below this low. Why the entry is here and not here? Because we have a fair value gap here and we could use it to put our entry, right? You have this fair value gap here and then price fill it. We could use it, of course, after the choke, right? Price leave some fair value gap, because guys, as you guys can see, the choke happened here when we broke, right? When we broke this green candle high, but still some fair value gap left behind. It's tiny, 100%. It's tiny, no question about it, but it was there. And then this candle here made a pullback after we broke this. We made the choke to fill it. So this is exactly where our order should be, right? So yeah, that will be something like this on Nasdaq. And as I showed to you guys, we had one stop loss, and this entry will still running till now. And probably I would even take this entry because it's out of New York session already, right? Yeah, 100%. New York closed it, and then we had the entry. So I wouldn't even take it. I would just, if I had to trade Nasdaq today, I would finish my day with a minus 1%. That would be my result for today on Nasdaq. But I didn't trade today, so good for me. So US oil, what happened today on US oil? Same thing, almost same thing like Nasdaq, right? Is a session, we swept the bottom. We can search for entry confirmation here at the bottom, and then we swept the top. We can search for entry confirmation here at the top too. I will delete this. It's just unnecessary. The trade is still running, so if I want to, and we already talked about this trade. I explained everything about this trade yesterday to you guys on the yesterday live stream. So yeah, so we swept the top, swept the bottom, and we swept the previous London low. Sorry, the London low. If it will be, if to be previous, we should have another one. And after we swept everything, start to go bullish. So here, let's try to find any entry confirmation. So the maker asked here how much you risk per trade. It definitely um, depends on how confident I am of the on the analysis. If, let's say, let me give you one concrete answer, right? If I'm using daily cycle of the price and I saw the price sweeping, that the price swept, sorry, the London low, I will risk 1%. 1%, right? I will risk 1% or even 2%. But if it's one trade that it's not daily cycle, or the entry trigger is a little bit awkward for me, or I'm using the second imbalance, I may risk 0.5% on this trade, right? But it's between 0.5 and 2%. I don't blow up above this. And half percent, 2%, depending on how confident I am in the analysis. But if you are a beginner trader, you can risk between 0.25 and 0.5% in your trades, right? That's the best risk management, I think. And please always use stop loss. Don't trade without stop loss. Just dumb people trade without stop loss. Okay, always use stop loss. Let's start and try to find a entry here. So guys, unfortunately, I don't know, I'm just not feeling good, so I won't talk about trade psychology on today live stream anymore. I will reschedule it for tomorrow. So we will talking about trade psychology tomorrow. But let me show to you guys all the trades that we had on US oil today, and then we will finish the live stream, right? Trade psychology without tomorrow, right? So we are on live over 1 hour already. After taking the liquidity high or lows of session, what is your entry confirmation? Go to my YouTube channel right now and search for entry patterns I used to trade, and you will find all entry confirmation, all entry triggers that I used to trade, right? You can go there and find them. So here, what you can see here, after we swept the low of Asia, we had one entry, clear entry. I think a lot of people will say, oh, the entry is this, and we made one internal break of structure. 100% we made one internal break of structure here too. But we had one entry trigger even before this internal break of structure. Is this one, this chalk confirmation. Exactly here we had one chalk. So your entry actually was this, with this tiny stop loss, right? Something like this was your first entry. That's the first entry. Unfortunately, it will be a break even, 100%. After we break this, I will put my order, I think, on a break even already. Then you can argue that we had a break of structure too. I think it's still valid, the trade idea, because we swept the bottom of Asia, and I could try to buy here again. But after price break this high again, I will put my trade on break even, and then when price retreats here, it will take me out again on break even. So we had two entry confirmation actually, but I think if I was trading, both of them would be a break even trade for me. That's what I think, right? Um, so after we swept the top, what we had here, um, let me read structure, right? High, low. Hmm. Yeah, we had one entry here, 100%. Because clearly here we made a internal break of structure, as you guys can see here. Show you guys. We have bullish uh, players on the market, right? Let me turn off to this. Delete it. So we have bullish players on the market, bearish players, bullish players again, bearish players. Then price retreats to here. So you had the opportunity to short exactly here and put your stop loss above the high. And this one would be a trade, right? Yeah, would be a good trade, because if price didn't break this low, I wouldn't put my stop loss at break even. So yeah, it would be the trade of the day, at least on US oil, right? 1 to 10 risky reward at some level here we had, right? Here we had 1 to 10, 10 point something. So yeah, we swept the top, swept the bottom. So again, we already swept the top, we already swept the bottom. What can happen with London, with Asia? Nothing more, because we already took all the liquidity. But when London swept the bottom of Asia, it leaves a bottom there too. So the London bottom is there, and New York can swap it and take liquidity, right? So that's exactly I showed to you guys a 15-minute time frame. Let me activate again the session indicator. As you guys can see, the London low was here. What New York did, New York swept it. And then we have this bullish, huge bullish move to the upside. Let's see if we had any entry opportunity here after we swept the London low, right? Let's go. Let's see if we had anything. So this one was a London low that I showed you guys that we had actually two entry opportunities where both of them would be a break even, right? And here, let's search for one entry confirmation. Of course, we had one, right? It's very clear, I think, for everybody actually, that we had a break of structure here on 1 minute time frame, and you could capitalize clearly when where the price came to fill exactly here on the fair value gap, and you could clearly execute your trade. Let's say 50% of the fair value gap. Let's say I don't do this like all fair value gap. I search for the 50% they took the trade. No, I don't do this, right? I just put on 50%, just random, right? So 1 to 10, it would still running, right? Yeah, because president didn't actually not. Wait, 1 to 10 would be some place here. Well, this trade would still running, but just to show to you guys the concept, the idea behind it, how easy it is to trade using daily cycle of the price with the right entry trigger. So guys, first, I have some things to say to you guys. First, subscribe to the channel, right? And drop your like in this live stream if you like it. And of course, if you guys want to follow me on my Instagram, the link to my Instagram, to my Telegram too, is in the description of this video. On my Instagram, normally I share just my trades and I don't share the analysis itself. But on my Telegram, no, sometimes I share the analysis too. So to you guys to understand the process, all the process to say, okay, here I want a short, or here I want to go in one long position, right? Tomorrow we will do another live stream here, 11 p.m. London time. So I see you there. I see you tomorrow, and we will talk about the psychology part of the trade. And I think it's very important for you guys. If you have any problem controlling your emotion while you're trading, it will be very important to you. I hope you be here to learn and get a little bit of knowledge of value from me, right? So yeah, that's it. Hope you guys are well. I see you guys tomorrow in my next live stream. Subscribe and drop a like, guys. See you.